Imagine trying to look inside a company's financials, not just seeing numbers, but really getting the pulse of the business, cutting through all of the noise to find that, that crucial insight. You're always looking for that edge, right? That deeper understanding. And today, well, that's exactly what we're aiming for. We are taking a comprehensive deep dive into Shopify Inc. That's NYSE, ticker symbol SHOP. It's July 30th, 2025, and we want this to be a snapshot tailored specifically for you, the investor, who's really looking to understand its potential. Our mission today is simple: unpack Shopify's core business, look at its recent financial performance, the key metrics that actually matter, the industry trends shaping its future, and yeah, those big macroeconomic forces too. We'll also explore the risks, because there are always risks, and its competitive advantages, hopefully equipping you with the vital knowledge you need.
Right. And what's really compelling about Shopify, I think, isn't just that it's another tech company. It's really central to how commerce itself is evolving. At its heart, it's all about the democratization of selling, empowering businesses, from tiny startups maybe working out of a garage all the way up to global enterprises.
Yeah.
It's fundamentally changing how brands connect with their customers.
Okay, let's unpack that a bit. For anyone not familiar, maybe with the origin story, Shopify got started way back in 2006. Tobias Lütke, Daniel Weinand, Scott Lake founded it right out of Ottawa, Canada. And believe it or not, it actually started as an internal tool they built just to sell snowboards online. Talk about scratching your own itch. But today, its core purpose is really being this leading commerce platform, letting businesses of all sizes build, run, manage their online stores, foster that direct brand-to-customer connection.
Exactly. And their offerings, they basically fall into two main buckets, two revenue streams. First up, you've got subscription solutions. This is the core Shopify platform, the website builder, the hosting, security, marketing tools, all those different plans like Basic, Shopify, Advanced, and the big one. Plus, it also includes their app and theme stores. That's where merchants can really customize and add functionality. This part provides that stable, recurring, high-margin revenue base.
Okay, stable and recurring. And then there's the other side, merchant solutions. This sounds like where Shopify gets really involved in the seller's day-to-day and where, well, a lot of money comes from.
Absolutely. Yeah, this is the primary revenue driver. Often it's around 70-75% of their total revenue.
Yeah.
A huge chunk comes from Shopify payments. They get a transaction fee on sales. But it's way more than just payments. It includes things like Shopify Shipping, helps with getting discounted shipping labels, Shopify Capital, which offers business loans, their point of sale or POS system for selling offline and physical stores, and marketing tools like audiences and email. It's a really integrated suite.
Right, an integrated suite. So with all those tools out there, what really makes Shopify special? I mean, it's a crowded market. What are its core competencies, its edge?
Yeah, good question. It kind of boils down to a few key things. First, it's just incredibly user-friendly. You don't need to be a tech whiz to build a really nice, functional online store. Yeah. Second, they've built this massive ecosystem, a really strong network of app developers, theme designers, partners, all offering tailored solutions. That adds huge value. Third, the scalability is impressive. It works for, a single person selling crafts all the way up to huge enterprises on Shopify Plus. That flexibility is key.
And that seller-centric approach you mentioned, giving businesses the tools to rely less on, say, Amazon, letting them build their own brand, own those customer relationships, that's a massive difference, isn't it?
Oh, it's huge. Absolutely huge. And then you add their omni-channel integration, so online and offline sales work seamlessly through their POS. But here's where it gets really interesting for the future. They are aggressively integrating AI, generative AI tools like their Sidekick Assistant, to really boost seller efficiency.
Okay, AI, Sidekick, we'll definitely circle back to that. So for you, the investor listening, the big takeaway here is maybe that Shopify isn't just a website builder. It's way more. It's this comprehensive, growing ecosystem designed to empower independent merchants. It's shaping the future of commerce by enabling that direct-to-consumer play. That feels like a powerful long-term story.
It really does.
All right, let's talk numbers because, that's where you see the real health of the company. Shopify has shown really strong growth, obviously, but lately there seems to have been a definite shift towards profitability, towards efficiency.
That's exactly right. We've seen consistently high double-digit revenue growth for a long time. Now, there was a bit of a slowdown, maybe 2022, 2023, partly due to just e-commerce normalizing post-pandemic, but also, importantly, they sold off their Shopify Fulfillment Network, the SFN. That changed their logistics approach. But the crucial shift, as you said, was moving from that growth at all costs mindset to really focusing on efficiency. And that's led to significantly better operating and net profit margins. And their cash flow reflects that too. Strong operating cash flow, consistently positive free cash flow, especially after selling SFN. It signals really good financial health.
Okay, let's get specific because we actually have recent numbers. As of today, July 30th, 2025, we have their Q1 2025 results from back in May. Total revenue hit $2.0 billion. That's up 23% year over year, and it beat estimates. Subscription solutions, that was $511 million, up a really strong 29%. And merchant solutions, the big engine, grew 21% to $1.49 billion. Their gross merchandise volume, GMV, that's the total value of stuff sold in Shopify stores, hit $60.9 billion, also up 23%. Pretty solid.
Yeah, very solid. And the profitability numbers for Q1 were just as impressive. Their non-GAAP operating income was $232 million, which is an 11% margin. Non-GAAP EPS came in at $0.29. Again, beating expectations. And looking forward, their guidance for Q2 2025, the quarter ending soon, they're suggesting revenue growth in the low 20% range. And GMV growth maybe a few hundred basis points higher than that. So that points to what, maybe Q2 GMV around $880 to $900 billion. And revenue somewhere in the $2.6 to $2.7 billion range. That feels about right based on trends.
Okay, and they're guiding for a non-GAAP operating margin in the low to mid-teens for Q2. So this disciplined financial performance, it seems like it's directly coming from that cost restructuring they did, getting more enterprise customers onto Shopify Plus, and like you mentioned, using AI to help sellers be more efficient.
Exactly. And if we break down where that revenue comes from, it's quite telling. Subscription solutions, like we said, maybe 25–30% of the total. Stable, recurring, high-margin stuff, platform fees, App Store, Theme Store, plus licenses.
Right, but the powerhouse is still Mervant Solutions, making up that huge 70–75%.
Precisely. And it's directly tied to that GMV number. The insight here for you, the investor, is seeing how deeply Shopify is embedded in its merchant success through payments, shipping, even financing. And a key metric to watch for profitability is the payments take rate. That's the percentage they keep from transactions processed via Shopify Payments. It climbed to 1.95% in Q1 2025. That's a positive sign for monetization.
Okay, payments take rate noted. What other investment metrics should people be tracking? We hear about the price to sales ratio, PSR. Still high, but maybe stabilizing a bit.
Yeah, the PSR is still up there, reflecting those high growth expectations, but it has definitely come down from the peak levels we saw a couple of years ago. It's more stable now, and absolutely tracking the growth in gross payment volume, GPV, that's the volume going through Shopify Payments, and watching that take rate are fundamental for understanding merchant solutions. And that return to consistently positive free cash flow, FCF, especially after selling SFN, it just shows real financial strength. They have cash to invest now.
Which brings us to dividends.
Right. People always ask, Shopify doesn't pay dividends. Correct. They're reinvesting everything.
Correct. No dividends. They prioritize putting profits back into the business, R&D, especially that AI integration we keep mentioning, expanding internationally, maybe some strategic M&A down the line. So for you, the investor, the focus here is still very much on capital gains through growth, not income.
Okay. So the big takeaway on the financials: strong discipline after restructuring, solid GMV growth, improving take rates. It points to a financially sound company that's growing profitably. That seems well positioned for sustainable growth. Exactly. Sustainable is the key word there.
So beyond the numbers, what's really driving Shopify right now? What are the big catalysts, the recent news, the industry trends we need to be aware of?
Well, the most immediate thing on the calendar for investors is their Q2 2025 earnings release. That's coming up on August 6th. Everyone will be watching revenue and GMV growth very closely, also profitability, free cash flow, and critically, any updates to their full-year guidance, especially any more specifics on how they plan to make money from all this AI development.
Okay, speaking of AI, we mentioned Sidekick. What else are they doing there? Is it just the assistant?
No, Sidekick, their AI assistant for merchants, is sort of the flagship example, but it's broader. They're constantly adding AI tools to help with tasks like, writing product descriptions automatically, predicting inventory needs, improving customer support chatbots. They're also focusing heavily on things like AI storefronts and something called checkout extensibility, which gives those big Shopify Plus users much more control over their checkout process. Huge for large brands. And beyond AI, they're still pushing hard on multi-channel and international commerce. Things like improving B2B features, making localized domains easier, integrated translation, multi-currency support. Global reach is key.
It sounds like global is a major theme. Any specific news there?
Yeah, a really key development was renewing their multi-year strategic partnership with Globally. Global remains the exclusive merchant of record for Shopify Managed Markets. That's a huge piece of their international direct-to-consumer strategy. And just showing the strength of their partner network, Domain was recently recognized as a Platinum Peer Partner. Little things like that show the ecosystem is healthy. Oh, and another recent bit of news, they updated their terms of service, July 25th. It clarifies how they use what they call Shopify Network Intelligence, basically aggregated, anonymized customer data to improve merchant performance and power features like Shopify Audiences, importantly, without sharing data directly between merchants.
Interesting. And what are the analysts saying? Stock's been doing well, right?
Generally positive sentiment in July. Lots of buy or hold ratings. Many analysts increased their price targets. KeyBank went up to $145, for example. Though some are more cautious, like UBS staying neutral at $110. The stock has been trading near its 52-week highs, yeah. And the RSI, the Relative Strength Index, was nearing overbought levels, which suggests strong recent buying pressure and investor confidence.
Okay, so summing up recent news. Lots of AI feature expansion, continued focus on profit, global push, getting bigger enterprise clients. How does all this fit into the broader e-commerce and SaaS industry trends?
Well, the good news is the global e-commerce market itself is still growing strong. B2C e-commerce is projected to hit something like $4.8 trillion in 2025 and grow to $5.5 trillion by 2027. That's healthy mid-single-digit annual growth. Online retail is definitely rebounding, and certain regions are booming. Latin America, for instance, showing really strong growth, maybe 22% between 2023 and 2026. That opens up big new markets for platforms like Shopify.
And that underlying trend of digital transformation, businesses needing SaaS tools, that's still a massive tailwind, right?
Absolutely massive. Businesses are still investing heavily in going digital, which drives demand for scalable cloud software like Shopify. And AI in commerce. It's not optional anymore. It's becoming essential for personalization, optimizing marketing spend, making operations more efficient, even creating virtual try-on experiences with AR. It's everywhere.
And how does Shopify fit into that whole DTC versus marketplaces debate, like Amazon versus building your own brand?
That's a really interesting dynamic. Amazon obviously dominates the marketplace model, but the direct-to-consumer, or DTC trend, which Shopify basically powers, lets brands build those direct relationships, control their own identity, own their customer data. Shopify has a leading global share in enabling that DTC model.
Right. And controlling your own data seems more important than ever.
Exactly. Especially with digital ad costs rising and privacy changes making things trickier. Platforms like Shopify that offer integrated marketing tools and direct customer insights become incredibly valuable for merchants trying to navigate that.
Okay, so the investor takeaway here seems to be that Shopify is riding some really powerful waves: e-commerce growth, digital transformation, AI adoption. Its focus on AI and core commerce tools positions it really well. And that upcoming Q2 earnings call will be a key moment to check the pulse on that momentum.
Definitely one to watch.
Now, let's maybe zoom out again, look at the bigger picture. Macroeconomic trends, potential roadblocks. Because even a strong company like Shopify isn't totally immune to what's happening in the wider world.
That's a really crucial perspective for any investor. So as of July 2025, the IMF actually nudged up its global growth forecasts slightly for 2025 and 2026, signaling maybe a bit more resilience in the global economy than feared. That's generally good news, right? Supports consumer confidence, encourages businesses to invest. That helps Shopify directly.
There's always a but. What about inflation, interest rates? Especially here in the U.S., that still feels like the elephant in the room.
It absolutely is. U.S. inflation is still expected to stay above the Fed's 2% target for a while. And the consensus seems to be the Fed will likely hold interest rates steady until, well, maybe March 2026 at the earliest. And that has real impacts. Higher borrowing costs for merchants using Shopify Capital, for example. It could potentially dampen consumer purchasing power, which might affect GMV growth. And growth stocks like Shopify are just generally more sensitive to higher rates, impacting their valuation multiples.
Right, valuation sensitivity. Are there shifts in how consumers are spending that might pose a challenge?
Well, we're seeing preferences for sustainability, subscriptions, digital payments, things that generally fit Shopify's model. But there is this significant trend, especially in the U.S., of consumers prioritizing experiences over goods. Now, that could be a slight headwind for pure retail e-commerce. But Shopify's platform is pretty versatile. With its POS system, it can support businesses offering services or hybrid models too, so it's not necessarily a direct hit. And of course, supply chain issues and geopolitical risks, those are still lingering concerns that could impact inventory costs, shipping times, consumer prices everywhere. Always something to keep an eye on.
Okay, so given that backdrop, what are the biggest specific risks for Shopify investors right now?
I'd say number one is probably the potential for an e-commerce market slowdown, combined with intensified competition. Growth might normalize after the pandemic boom, and you've got giants like Amazon, Meta with Facebook shops, even TikTok Shop really stepping up their commerce features. That could pressure Shopify's GMV and market share. Second, as we touched on, its valuation. Shopify stock still trades at a premium. It reflects high growth expectations baked in. So if results disappoint or growth slows more than expected, you could see a sharp correction, especially with rates staying higher for longer.
And even with their focus on profit, they still need to spend money to grow, right? So cost control is an ongoing thing.
Absolutely. They've made progress, but they still need to invest heavily in marketing, R&D, expanding internationally, building out those omnichannel features. That costs money. If they don't manage those costs effectively, it could squeeze margins again. Fourth risk. Being a global platform makes them vulnerable to policy and regulatory changes. Think international trade rules, like changes to de minimis thresholds, or new data privacy laws like GDPR, or state-level rules in the U.S. These can add costs or complicate cross-border selling. And finally, related to all the AI buzz, there's AI technology competition and just managing expectations. AI is moving so fast, Shopify has to keep innovating. If features like Sidekick don't deliver real tangible value, or if competitors pull ahead, the platform could lose some appeal. Plus, you always have risks around AI model errors or ethical concerns.
Okay, lots to consider there. So the key takeaway for you, the investor, is while the global outlook is sort of okay, maybe cautiously optimistic, persistent inflation and higher rates are real headwinds. Be aware of these external risks and the internal ones like competition and execution risk that could definitely impact Shopify's performance and its stock price.
Prudence is always wise.
Definitely. So let's shift gears now to Shopify's real, maybe, secret sauce, its competitive edge, its internal strengths. In such a busy market, why does Shopify really stand out? What makes it different?
Yeah, this is where you see Shopify's unique position shine. If you compare it to big marketplaces, Amazon, Etsy, eBay, the fundamental difference is Shopify empowers merchants to build their own brand. They own the customer relationship directly. Unlike Amazon, which kind of absorbs sellers into its own universe, Shopify enables independence, and it offers much more flexibility across different product categories.
Right, it's about owning your brand, owning your destiny almost. What about comparing it to those simpler website visitors like Wix stores or Squarespace Commerce?
Shopify just offers a much deeper, more comprehensive suite of actual commerce tools, integrated payments, shipping, capital, that huge app store for specialized functions. And crucially, the scalability is far superior, especially with Shopify Plus. Businesses hitting high growth often outgrow Wix or Squarespace quickly. Shopify is built to handle that scale. It's less a website builder, more a full commerce operating system.
Okay, an operating system. And then against the really big enterprise solutions or maybe open source platforms like WooCommerce or Adobe Commerce, which used to be Magento, where does Shopify fit there?
Against open source like WooCommerce, Shopify offers a fully managed service that dramatically reduces the technical headache and development costs for merchants. You don't need a team of developers just to keep the lights on. And compared to complex enterprise solutions like Adobe Commerce, Shopify Plus often provides comparable, powerful features, but usually at a more reasonable cost and with significantly less complexity. Faster time to market is a big win there.
And you mentioned Shopify payments earlier. That integration seems like a key advantage against standalone payment providers like Stripe or PayPal, too.
Absolutely. Because Shopify Payments is fully integrated, it just simplifies everything for the merchant. One dashboard, easier reconciliation. It's a huge convenience factor. And as we discussed, it's a major and growing revenue stream for Shopify, which reinforces the value of their whole ecosystem. It ties everything together.
Okay, so summing up those advantages, it's that integrated one-stop shop idea, a massive ecosystem of apps and partners, incredible scalability, constant innovation focused on the merchant, like with AI Sidekick, and that seamless omnichannel strategy connecting online and offline. It really paints a picture of market leadership.
I think that's fair. And behind all that, you have strong internal capabilities driving it.
Right, let's talk about that. What's going on inside Shopify that makes all this possible?
Well, first, their technology and R&D are clearly top-notch. You see it in their platform innovation, those Shopify Editions product drops, advanced tools like Sidekick, checkout extensibility. They run on a scalable cloud architecture, and they're good at using data for insights and efficiency. Then there's human resources and leadership. It's still founder-led with Tobias Lutke, who's seen as a real visionary. They attract top engineering and commerce talent. And culturally, they seem to have successfully shifted towards that leaner and faster, more efficiency-focused mindset recently.
That efficiency focus keeps coming up. Seems like a major theme post-restructuring.
It really is. And you can't underestimate their strong partner and developer ecosystem. That huge app store, all those partners building solutions. That's absolutely crucial for adding value, keeping merchants happy, and attracting new ones. And finally, their financial management and capital allocation lately has been, frankly, very effective. That restructuring selling SFN, the layoffs was tough, but it dramatically improved profitability and free cash flow. Now they can reinvest that cash much more efficiently into core R&D, AI, and smart growth areas.
Okay, so the core investor takeaway here on strengths and advantages seems clear. Shopify's internal capabilities combined with its distinct competitive advantages really underpin its market leadership. It gives them resilience and, significant potential for sustained long-term growth.
Well said.
All right, let's try and bring this all home. Shopify Inc. It really does stand out as a high-quality growth stock, doesn't it? It's tied so closely to the expanding global e-commerce market, and now this rapid evolution of AI technology. For you, the investor, maybe a long-term conviction. Based on that market leadership, the AI innovation push, that growing merchant ecosystem, it seems like a pretty prudent strategy, assuming you have the risk tolerance.
Yeah, I think that's a fair assessment. And as you continue to watch Shopify, definitely keep a very close eye on that GMV growth and the payments take rate. Those are your core indicators for the main revenue engine. Also look for continued consistent profitability and strong free cash flow generation. That's the proof of operational efficiency. And finally, listen closely for any specific metrics or even just qualitative comments from management about AI adoption. How are merchants actually using it? Is it driving engagement? Are they starting to monetize it effectively? Those will be key signals about their future trajectory.
It leads to a final thought, doesn't it? As AI keeps reshaping how businesses operate online, what does Shopify's whole model empowering all these independent merchants with really cutting-edge tools? What does that mean for the future of maybe decentralized commerce globally? How might that fundamentally shift the balance of power between individual brands and those giant centralized marketplaces? Something to think about. If you found this deep dive helpful, please subscribe.